Hi everyone and welcome to Boothy Bites. Hey Boothy, how are you doing?
Hey there, how you doing? All right?
Yeah, good. Can you believe we're May? This is Boothy Bites for May?
Crazy. Yeah, well, winter's here, I can tell, because it's a bit pretty chilly in the morning walking the dog. So I definitely know, we've flown through the summer, and I'm looking forward to summer again, really. But anyway, don't wish our lives away.
Yeah, that's it. All right, let's jump straight into the market update. So we've seen another cash rate increase from the RBA. What triggered that move?
Yeah, so I think there's no surprises, really. So the RBA have been pretty clear. It's really all about this inflation. And I suppose the real problem that the RBA has right now is how can they can't stop the inflation, the impact in the Middle East, the ongoing issues in the Middle East, with regards supply issues, also the cost associated with Australian sort of logistics, distribution of goods and services, and also importantly food, and also the fertilizer issue as well, with the impending event of potentially some of the harvests of crops around the world being a lot worse and lower than they've been seen for a while because of this fertilizer issue as well. So although the RBA is reacting to the trigger of the inflation, which has been perpetuated by fuel cost increases over the last 2 months, really the next 6, 12, 18 months, with all the things that are going on in the Middle East, how are they going to manage that? And really just continually increasing interest rates is going to be quite difficult for them to do, because on the flip side, if they continue to increase interest rates, it really puts a real hard brake on the economy, and that's not what the government is wanting as well. So as I said in my sort of commentary, I really do think that the next sort of policy changes will be RBA talking to government, and there'll be some initiatives to manage inflation pressures a little bit better collectively rather than individually. So anyway, and again, we've got the budget tomorrow night, so that's talk about that shortly. Anyway,
big talking point. All right, so let's move on to rates. Which lenders are standing out to the team at the moment?
Yeah, so quite a few of the non-banks, as it were, they're coming out with some really cheap and attractive rates, and we've got People Choice there. They're coming out with a 589 variable principal and interest owner occupier. We've got Bank of Sydney with a 619 variable rate as well, and then we've got Macquarie Bank and Bendigo Bank competing there at 6.09. So lots of competition around that sort of 6%, and pleasingly all of the banks only loaded 25 basis points on the increase that we've had. Everyone pretty much came out at the same time and said we've increased interest rates by the 25 and the 25 alone. So that's a good thing. And then just remembering, your majors they're always a price on request goal. So if you want best interest rates, your CBAs, your NABs, your ANZs and your Westpacks, we've obviously got to go through to those guys, talk through the merits of the deal. Usually low loan to value ratio, higher loan amount, you're going to get the best interest rates for those guys. So that's the sort of the breadth and spread of the variable rates. Some really attractive fixed rates. So we've got this kind of moving market right now where we've got this steepening curve because interest rates on the cash rate are supposed to be increasing as well over the next few months. The markets, the treasury markets, locking in another couple of interest rate hikes over the coming 3 to 6 months. So that already has been sort of factored in the interbank markets. But the fixed rates for the lenders, we've got IMB at a 6.24% 3-year fix, which I think is, in light of this sort of increased interest rate environment, is quite hot money. And Bank Vic have got a 5.99 still. I don't know how long they'll keep that for, but they have a 5.99 as well, so that's cheap as well. And then for your investors, we've got Move Bank at 6.14. We've got People's Choice at 5.94, and then again Mac and Bendigo Bank, they generally price 10 pips higher, so they're at 6.19 for your P&I. Again, Bank Vic have got a 6.29 interest only 2-year fixed as well, which is pretty attractive. Other thing to remember is right now we're starting to see a bit more cashback interest coming into marketplace. So ME Bank have got a cashback offer, ING Bank have got a cashback offer, and maybe I'm getting this wrong, but I think ANZ have also got a cashback offer as well. But speak to your broker who knows all about the cashback offers, and then you'll be able to find out as well. Don't speak to me.
Yeah, don't speak to Boothy.
Yeah, I might get it wrong. But anyway, yeah. So, and I think The reason for the cashback offers is really it's just trying to entice people to move. Obviously, the cost to move is a bit expensive, but if you're going to get a good rate and a bit of cash for it, well, then that's kind of creeping back into the market. Now, whether that's a good or a bad thing, I don't know, but make sure you're checking in now with your broker to get an affordability check and a best interest rate check, yeah?
Absolutely. So just back to the banks passing on that latest increase, are you noticing much competition between the lenders at the moment?
The retention of all of the main lending businesses right now is really, really good, yeah? So talking about competition, if you are looking at a rate, the first step of that rate review is actually to go back to your existing lender to ask for a better rate. And in the main, most of the banks will actually, they'll push pretty hard to retain you. So there's a bit of a technique around to, keeping them honest and getting that competition conversation loaded in with the banks. But that's our first step anytime we do a review, because there's no point in moving if we can retain the same credit structure, product with a better interest rate with your existing lender, right? Because there's a lot of pain to move. If they don't come to the party, well then, we'll share with you the best rates, and then we'll walk you through that process to move. So competition is pretty hot right now because the market right now, there's not as much refinancing happening. So the banks have got these big engines which need to do so many transactions every month. So they're looking at ways to attract and entice borrowers to them. So I'm thinking in this kind of leaner winter months, we might start to see some interest rate specials, some honeymoon rates and things like that coming through. So again, great time to review with your broker.
Yeah, always a great time to review with your broker. Just not Chris Booth.
Yeah, that's right. Well, you can give me a chat first and then I'll introduce you to a good broker.
Yeah, that's it. So Lydian Private is another exciting addition to the business. Can you explain what the offering is and who it's designed for?
So our private team is really, they're dealing with, I suppose, mums and dads who've got a little bit more money than the average, okay? And what I mean by that is that these clients have very expensive homes, lots of assets, maybe complex family structures, so using trusts and companies, maybe own big companies themselves or inherited a lot of wealth, so like family wealth, as it were, yeah. And a lot of these clients, they like to use the private banking environment for their money. And what I mean by that is the major banks, so CBA, NAB, ANZ, Westpac, they've got a private banking division, and you get a much higher level of service and you get a personalized service there as well. But for the privilege of that relationship, you've got to have borrowing or lending, which is normally over like $2.5 million to $3 million plus. Okay, so you've got to have quite a bit of business for those spaces. But the second part of it is because these lenders and in their private division, they manage their own money. They don't securitize it or sell it off and parcel it up into funds. It means they've got a lot more flexibility around the credit. So if you're a wholesale client, like I said, borrowing of more than sort of $2.5 million with strong assets as well, which that wholesale client dictates, well then there's lots of niche policies which allow you to borrow money short, medium term, but sometimes reliant on asset sales rather than purely regular income to service the debt. So again, we've got a lot of financial planning firms who've got these wealthy clients, and it's a niche service for those partnerships to help those clients as well as their normal retail clients as well. So yeah, we've got a great team. Sal and Josh look after clients in the Lydian Private space, and we've got some wonderful high net wealth partner financial planning firms, and yeah, it's been nice to see that grow and develop. Yeah, so we're really proud of the guys.
Yeah, absolutely. Now, speaking about growing, Lydian Corporate Advisory is on its way. What can partners expect from that space?
Yeah, so quite similar to like the Lydian Private offer. Okay, so we've got clients within our mix who run businesses. Yeah, so I'm not talking about sort of small businesses and sole traders. I'm talking about people who've got large enterprises, big corporate businesses, lots of complex lending debt needs, and to really overlay Lydian's diversified and specialized service proposition. We've got a team of really good people there who manage our Lydian Corporate Advisory, and we're looking forward to rolling that out to some of our networks. Now, from our private banking team, obviously that's for the personal loans of the clients, and those directors and things and owners of those businesses. But for the businesses specific, there's a lot of specialization, one in the product, two how you go to market and go to the lenders to apply for finance. And we feel we've got a nice fit there, because really just making sure you've got a healthy credit platform to go and borrow is very important for businesses as you need to grow, or you need cash flow to support contracts, or you're wanting to buy assets for the business to grow as well. We want to be there on point, reviewing the credit platform that business has, and helping that business, one, obviously get cheap interest rates, get good credit terms like short terms or long terms, and also make sure that the risks associated with the lending is good too. So I'm talking about like reviewing guarantees and things like that. So it's very sophisticated, and we've got the team to overlay that, and that allows us to go out to accountants now with a partnership proposition too, which is exciting.
Yeah, awesome. Now, there's been a lot of conversation leading into the federal budget around changes to capital gains tax and negative gearing. What are investors paying close attention to right now?
Yeah, well, it's a bit of a worry, isn't it? And I think, interestingly, over the last couple of months, we've seen a little bit in the property market of clients actually offloading their investment properties. There's been a big spike in investors actually listing and selling their properties, and really that's been predicated by this change of the federal government and their taxation, in particular focused on property investors. Now, we're not 100% sure what is coming, and hopefully we can get you, Jackie, to do a summary tomorrow after the budget, and we get that out to clients. But certainly they're looking and reviewing the capital gains position on investment properties. Typically, if you hold the asset for longer than 12 months, you get a 50% CGT discount on that property when you sell it. That's been reviewed. Also, when you own a property and the costs associated with the property being interest and other, there's a review of negative gearing and some restrictions potentially for that. And we're hearing that may well only be eligible now for new properties, not existing properties. So that's a worry. So those two things really mean that creating wealth through owning property, whether this legislation is grandfathered or not, that's a concern for us all. So tomorrow we know that the federal government is going to change in budget, and we'll review that and we'll share those numbers with clients, and then at least they can make informed decisions. But watch this space. There's a lot of property related changes coming, and we'll get that message out to everyone.
Yes, we will. Now let's finish with a quick wrap up. So 2 questions here. Give us a quick wrap up of behind the scenes at Lydian HQ.
Is this a Sarah conversation? Are you going to lead in with that one now? Is that cool?
And then I was going to say, let's talk about Sarah Matthews, the new face joining the team. So we'll roll it all into one.
We want girl power in the group. So, what's happening behind Lydian? So, the journey so far. So Lydian is 5 years old right now, which is crazy, right? She was a wee baby, and she's gone through her early years, the teen years, and we're kind of maturing into this adult years. And what we've realised is that Andrew and I, I suppose the front men of the business, we've been we've been doing everything for the business, and we have to change because we still want to grow. We've got a great platform for brokers to join us. We've got great partnerships, which we need to invest more time, effort, and service for those partners. We've got a diversification of our businesses now with the private, the corporate advisory, the practice finance stuff. So really, Andrew and I need to focus on building the brand, the positioning, and going out to market with that. And with that in mind, really, the goal then is to who keeps the train on the tracks. And we've got a lovely lady called Sarah Matthews. She's been a friend of the group for many, many years. She's a sensational professional, and like I said before, she adds a bit to that girl power of the team, which is cool. And it's funny, going through the handover process in the last sort of 6-8 weeks, I realised how badly I've been managing it. I thought I was better than Roxy to do this job, right? But obviously, I'm nowhere near as good as Sarah, and she's been taking ownership of the governance and the platform of the brokerage, which has been wonderful. She's got some great insights. We've got some changes ahead, which are positive changes for the business. And really what that does with our time, for Andrew and I, it frees us up to go out to market and do more with more people and be, and have positive, more stronger relationships with some of our partners as well. So watch this space. I'll be knocking on doors, coming out to see partners with Roxy now. And we know Sarah's got the measure of Lydian, and the changes she's already implemented and the changes that we've got coming ahead are really fantastic. So from Roxy and I, we just want to welcome Sarah to the team, and hopefully she's changed her LinkedIn profile now. So I'll check tonight.
That's when it becomes official.
Exactly right. Yeah, it's not official until you're on LinkedIn.
Oh, awesome. Well, thank you, Boothy. Thanks everyone for watching. And yes, we will be back with a federal budget update.
Ciao, ciao.
Bye.
See ya.